take a closer look at what was moving the markets. Julia Lee joins us from Bell Direct. Julia, the Australian share market gave back much of those gains from the morning when it went above that 4,500 point level, but still managed to end in the black.
Friday, the Australian market was off to a good start, and I guess the positive earnings coming through really helped our market in the morning. But coming into the afternoon, we did see the market down lower. I guess one of the influences has been the Shanghai market, which is down by about 2.5% at the moment. In the end, our market's still finishing in the black, up by 0.6%, so that takes it to a weekly gain of 3.7%. Earnings were in focus and Leighton's came in ahead of expectations. Its outlook also looking solid, so that stock actually rose 7.3%. We also saw the banks doing well. 3 of the big 4 finishing positive territory. National Australia Bank in the lead, they're up by 3%, but Commonwealth Bank actually lost ground, down by 1%. In fact, by the end of the day, we saw 5 different sectors in the red. We saw the consumer discretionary, consumer staples, information technology, utilities, and the property sectors all losing ground. The best sector on our market today was actually the healthcare sector. It took the lead, followed by the industrial sector, although the miners also made gains. And if we have a look at for the week, we saw airline stocks in particular doing extremely well. Virgin Blue and Flight Centre gaining more than 30% for the week. So altogether, a pretty good week, a very significant one for the Australian share market, because this is one where we saw the Australian share market actually break that resistance mark, which has acted like a ceiling for our market over the last couple of years, last couple of weeks. So you can see that the Australian market rose above that level. That resistance mark will now be support. We saw the Australian market reach past that mark today just briefly, but then bounce back up. So acting as support for the market, that 4,350 point level.
Just pulling out some more of the corporate news, how did Macquarie Airports fare after its update?
Macquarie Airports came up with its updates, and it does look like things are starting to look up for the company. If we have a look at earnings before interest, tax, depreciation and amortisation, it came out with first half numbers as well as second quarter numbers. Now, Sydney was the lead there. We've seen Sydney up by 2% for the half. A lot of that gain was in the second quarter. So in the last quarter, we saw a rise of 1.7%. I guess if we have a look at traffic at Sydney Airport, we have seen some new business coming through from Air Astro as well as V Australia. We've seen some extra business coming through from Tiger Airways as well as Delta Airlines. So that's been good news for Sydney airports. Some of the other European airports not looking so healthy though. Copenhagen though saw a decrease in the half of 11.3%, but in the second quarter only fell by 2.8%. So it does look like it's slowing at a smaller rate. Same trend in Brussels, where we saw a decline of more than 13% for the half, but in the second quarter, a decline of just 6.6%. But things still looking pretty difficult for Bristol. Things not looking too good there. 20.1% decline in the first half, and in the second quarter, a decline of 13.7%. Altogether, not much of a reaction in Macquarie Airport share price. If we have a look at Macquarie Airport in 2009, you can see that the share price where it closed today, around about $2.40, is exactly where it started off the year. So pretty flat for the year as well.
And just finally, Julia, the Aussie dollar reaching that 11-month high today.
It's quite interesting watching the Aussie dollar today. We saw Glenn Stevens and his comments really helping the Australian dollar to that 11-month high. So if I bring up the 24-hour chart for the Aussie dollar, this is what it looks like. Now, Glenn Stevens started talking about this point here, and you can see his comments really lifted the Aussie dollar to that peak. He said that the Australian market looks quite good at the moment. He was quite upbeat about the economy, saying that at the moment the cash rate is an emergency setting, and as soon as that emergency has sufficiently passed, then they will go back to more normal rates. So I guess the big question around the market was what's more of a normal rate. A lot of speculation on how far interest rates can go up and when the next hike might be. If we have a look at the average cash rate over the last 17-18 years, and that's around that 5% level. Now, the Australian dollars did start pulling back downwards. We're still seeing it at 84.3 US cents, but I guess the Shanghai market having a bit of an influence on the Australian dollar as well.
Julia Lee, Bell Direct, will be checking in with you for market moves, won't we, at 6:30 p.m. Eastern. Look forward to chatting to you in a bit more detail then.
I'll talk to you then. Thanks, Friday.
Julia.